Most investors are missing this key signal that has printed, which in the short term is extremely bullish, but in the long term is slightly worrying. So let's take a look. Now, this week is extremely important as we have the FOMC meeting. Well, to be honest, the conference. And the question and answer is where the real value lies. What is stated there, the sentiment that's going to be stated there is everything and will cater towards what the rest of this month will be. Now, if we look at all levels of indicators, there's not going to be a rate cut or hike. It's just going to stay the same, 98.2%. Any variation to that will cause a spectacular change in the market, but I don't expect it. Although I do expect some good things in forms of inflation, and that could point towards a rate cut in the future, as the oil prices have been tanking quite aggressively, and that's usually a sign of a deflationary effect. We need the federal funds rate, which is in essence the interest rates, to come down more in line with the 3.5% to 2.5%. Their line is 2%. I don't think that is viable this year, but a further reduction and a downtrend on that is something that will bode very well for the markets. Now, a key factor to look at is the SPX, which is the S&P 500. We've seen a aggressive pullback, retrace back up and produce a higher low. Now, where we are right away, by the way, my levels are on point. We might see, and most probably will see, a rejection of the 5,715. What we need right now is a bit of a pullback and a settling of a new higher low. That will give us confidence that this thing is going to move up and then move on from there, which will bode well for all the markets and everything on that level. But there could be some further downside potential at this present moment. If we look at Bitcoin, by the way, levels on point. It does look like we're having a small rejection of the 98,000 level that I've been talking about for many times, but it is holding at a very beautiful area, which coincides with, in essence, a higher low. Now, this could very well come down and retest the 21-day EMA. That is a real possibility, which could cause some downside in all other assets, such as alts and various other layer 2s. But that will be a healthy thing, because what we need to see is a healthy movement, a pullback, a setting of a lower high, and a further progression upwards. Now, this chart is extremely important, and it's printing something that what I stated at the beginning of the video will prove where the might of this market is going to go. At this present moment, we are building in on the weekly a triple bearish divergence. Now, let me explain what this means. A bearish divergence usually means a downfoot, a bearish move in the market. However, we haven't gained to the level of that rejection area on the RSI. How this works, usually what happens is the indicator shows a downward momentum, whereas the graph is on a higher momentum. That is a divergence from the bearish indicators. Now, this, however, and this is where the cool, interesting news comes from. If we draw that trend line moving up with the level of the bearish RSI divergence angles that are going on, this move up into the weekly to hit that trend line will dictate these potential 3 levels that we can get to. Either we go straight up and we will bounce between the 118 and 125 and then continue on to a major bearish move down, or we ladder up slowly, surely, and reach what could be $135,000 Bitcoin. That also aligns with a key level of fib. Who knows? This could be interesting. I want it to slowly ladder up so it gives enough time for alts to catch up. But these levels are set in my mind. Make sure you have a look at those and make sure you understand the difference between the two here. If we look at it at a closer level, we see also, which is a positive sign, that the graph is settling above the 21-day EMA at a key level of resistance, which we stated many moons ago. And this is the decision point. Was that a bear trap or were we in a bull trap? To be honest, to me, it looks like more of a bear trap because we are settling far above the key levels of resistance, which have now turned into support, and we're above the 21-day EMA. And if we look at the Alvarez indicator, this is what I'm calling it right now, look at that green dot. That would be a beautiful buy at that point. Now, one other really important factor is if we chart, this is Into the Cryptoverse, by the way, great website, you should check it out. If we chart various other bull runs, we are currently settling here. So we're due for this movement here, if it's going to happen. It's an if, who knows? But if we're following various other applications, that movement there should be approaching. My only worry, and potential good positive, is that the volume is moving down on every pump. Every pump is less and less and less. However, also every dump is less and less and less. So what this is indicating to me is a violent move one way or the other. Something is coiling up to happen in Bitcoin and in alts that is going to make massive moves. Whether this will be up or down, I'm not too sure. In my mind, I'm feeling from what we can see from the indications, most probably up, but we will see. Now, in conclusion, and this is really important, we have some major data coming out. The FOMC is always a highly volatile situation. We see key things happening. We see a bearish divergence forming. Now, the triple touch bearish divergence is one of the strongest indicators you can have, but we're not there yet. To get there, we're looking on the weekly. These are really high time frames here. To get there is going to be multiple weeks, and that could potentially show some massive move up. We'll see where it goes from there. All I will say is stay safe, understand the risk, and this is definitely not financial advice. This is just pure entertainment. I'm just looking at it. I don't know what I'm talking about. I'm Alvarez, and I'll catch you guys later. Peace.